pressures inside that particular part of the business have not necessarily abated. How will the market handle that bit of news?
I don't think it's, well, the market guidance-wise, I think whether the market was expecting guidance to come from Myer, I'm not too sure today, but I think the second quarter of this first half result was particularly good. A solid second quarter, as Evan mentioned, it was a soft period over Christmas for the retailers, so to come in line with expectations today, I think like-for-like sales up around 1.4%, so meeting expectations of the market, the dividend possibly a little higher than what was expected. I think what's interesting here is I think it's enough for the retailers at the moment to sort of be meeting expectations, because the retailers and the consumer discretionary continues to be the most heavily shorted sector on the market. If we have a look at Myer, around 13% of its trading register is short sold at the moment, and looking across the other discretionary retailers, the biggest short sold on the market is JB Hi-Fi, around 20%. DJ's around 9%, Harvey Norman around 10%, so very, very heavily shorted. So I think if we can see a trend of improvement through retail sales, certainly consumer confidence has been rising. It's yet to be seen really in flow through to the retail numbers, but if we can see a slow improvement throughout the year, no negative news is going to be very good for retailers because of the amount of short sold positions within them.
Slide overnight, that's looking disturbing, or, you know, how do you read that?
Sorry, what was that?
The price of iron ore overnight, spot iron ore, was on the skids, 3.25% weaker.
Yeah, down around $4, slipped back below that $140 mark. I think really the concerns at the moment has been the news flow coming out of China. Of course, China very important to the iron ore market. There was some reports released yesterday, I think it was from the Shenzhen Housing Authority, saying that there's not going to be any new increase in terms of houses, in terms of new housing prices. So I think the concern there is increased measures in terms of property pricing, and the concerns that this is going to flow through the broader Chinese economy, because they do have a bit of a concerns in terms of housing price inflation over there at the moment, and if they do clamp down on this, there's concerns that this will flow through the broader economy, including the likes of manufacturing, industrial production, and that of course will flow through to the iron ore price. But the iron ore price has continued to be very well supported. I mean, it's averaged around around $150 a tonne through 2013 so far, and really it's well above consensus forecasts in the market, most expecting it to pull back to around $120 for 2013. Even the big miners such as Rio and BHP have noted they're expecting a pullback in the iron ore price. So far it's still holding up pretty well. We saw a couple of days of gains in the iron ore price for the past few days, drop off last night. I think those concerns around the Chinese property market's key here for the iron ore price at the moment.
You can have such, it's a fairly sizable drop-off in the iron ore price, and yet this morning you've seen the Australian dollar rally and the overall market rally. I know I can see a couple, one or two iron ore related plays weaker, but you know there was a time when you'd see a price drop like that and the whole market would just, say risk off for just a moment there. Tim.
Yeah, well that's right. I mean the movements in the iron ore miners have been interesting compared to the iron ore price. Of course, when we saw the iron ore price bounce back from $80 up to $150 over the past 6 months or so, the iron ore miners did rally, but even with the price holding up around $150, the scepticism in the market saw the iron ore miners actually pull back from those highs we saw. We saw Fortescue rally up above $5. It's now trading back around $4.40. Same with Atlas Iron and Rio Tinto have pulled back from highs as well. So the expectations of a slowdown in the iron ore price throughout 2013, I think will continue to weigh on the iron ore miners. I think what we'll have to wait to see is the second half of this year, how the iron ore price has performed. I mean, certainly you're going to have to see a sort of prolonged period of a sustained higher iron ore price to see that start flowing significantly through to their earnings. So I think at the moment the market just waiting to see whether it can hold up to these levels. If it does, I think certainly we should see some re-ratings of these iron ore stocks.